Earning money by buying and selling stocks using AI involves leveraging advanced algorithms, machine learning models, and data analysis to make informed trading decisions. AI enables traders to process vast amounts of data, such as historical price trends, news sentiment, economic indicators, and even social media activity, far more efficiently than traditional methods. By identifying patterns, predicting market movements, and automating trades, AI can help you capitalize on opportunities in real time while minimizing emotional biases and human errors. However, success in AI-driven trading requires a solid understanding of both financial markets and the technical aspects of AI. Here's a step-by-step guide to help you get started. Defining your objective is the first and most crucial step in building an AI-driven stock trading strategy. Start by deciding what you want to predict, as this shapes the entire process. For example, you might predict stock prices, such as the next day's closing price, for short-term trading. Alternatively, focus on predicting price movements, up or down, for binary decision-making. You could also forecast volatility to manage risk or identify trends for broader market insights. Once your prediction target is set, choose a time horizon that aligns with your trading style. Short-term predictions, intraday or daily, suit day traders, while medium-term predictions, weeks or months, are ideal for swing traders. Long-term predictions, months or years, cater to growth and value investors. Clearly defining your objective ensures your AI model is tailored to your goals, whether it's capitalizing on quick market movements, managing risk, or building wealth over time. This clarity guides data collection, model selection, and evaluation metrics, laying the groundwork for a focused and effective trading strategy. A well-defined objective is the cornerstone of successful AI-driven trading. Collect data from sources like Yahoo Finance, AlphaVantage, and Quandl for historical price data. Include fundamental data such as earnings reports and PE ratios. Use alternative data like news sentiment, social media trends, and economic indicators. Focus on price data, open, high, low, close, volume, and technical indicators, e.g., moving averages RSI, MACD. Incorporate sentiment data from news headlines and Twitter for market mood analysis. Clean the data by handling missing values through interpolation or removal. Normalize or standardize data to ensure consistency across features. Remove outliers that could distort the model's predictions. Proper data preparation ensures accurate and reliable model training. High-quality, well-prepared data is the foundation of effective AI-driven trading strategies. Choosing the right machine learning model is essential for building an effective AI-driven trading system. Use regression models like linear regression and SVR for predicting continuous values such as stock prices. For discrete outcomes, like price direction, employ classification models such as logistic regression, random forest, or gradient boosting, e.g., XGBoost. For complex patterns, deep learning models like RNNs and LSTMs are ideal for capturing sequential dependencies. For time series data, specialized models like ARIMA and Profit are highly effective. The choice of model depends on your prediction goal, data type, and pattern complexity. Experiment with different models. Evaluate performance using metrics like accuracy or MSE, and refine your approach. Combining domain knowledge with machine learning enhances decision-making. Regularly update and retrain models to adapt to changing market conditions. A well-chosen model is key to building a robust and profitable trading system. Continuously monitor the model's performance in live markets to ensure effectiveness. Retrain the model periodically with new data to adapt to changing market conditions. Track key metrics and evaluate predictions against actual outcomes to identify improvements. Address issues like overfitting or data drift to maintain reliability. Regular updates and monitoring are essential for long-term success in AI-driven trading. Manage risk. Even the most advanced AI models cannot guarantee profits. Implement risk management strategies such as diversification, stop-loss orders, and position sizing to protect your capital.